Today is Monday, April 11th, and today we are going to walk through the trade I took, and I'll also walk you through additional entries that you could have taken just by using this simple strategy that we've been talking about for the past couple of videos. All right, so my first personal trade, well, before we do that, I always want to see, okay, what the daily trend has been. As you can see, the daily trend, whoa, we went far. All right, so as you can see, coming into New York, we had been bearish. All right, so I was looking for sells. All right. Okay, cool. So I was looking for sells, and here, as we were coming up, so I saw this big push down, the 13 and the 50 cross. We'll talk more about that in another video. But that was added confirmation for me that we were going to continue selling. So during this pullback, we began to get consolidation at these EMAs. Now, as you know, that is my first, light bulb. Hey, pay attention to this. We want to start paying attention when we get consolidation at an EMA when the trend has been established. Okay, write that down. You want to look for consolidation at our EMA once the trend has been established. And what's going to form is a cinder block. And if you haven't watched the first video, stop this video right now and go watch the first video in the series, because you're going to learn, what the cinder blocks are, and I get more in detail with those in that video, okay? So I saw this cinder block forming. So I said, okay, let's start to pay attention to this area. And then we got our flat top candle. Then we got another flat top candle. Now this third flat top candle had a lot of momentum. Okay, so I entered after this flat top candle here. Now, most of the time I would enter on the first flat top candle, but I didn't really see these two form. I think that maybe I was looking at my laptop or something like that, my work laptop, but I saw this third one. And after I saw that third one form, I said, okay, let's go ahead and enter. Stop loss above the high, okay? And initially, my TP is always going to be the previous low for safety, okay? Just for safety. But I've let it run a little further today. I let it run to 50 points. So what we had happening here, I got this sell down and I was in profit, okay? Then we got this retracement. I said, okay, cool. Then I saw this consolidation for me right here. Now this could have been a second entry, okay? Because now you have consolidation, you have a cinder block forming at the 200, which is even better than it forming at the 13 or the 50. Once I saw this consolidation here and then this strong flat top candle, that candle had a lot of momentum, that is another entry. That is another entry, okay? Stop loss above the high. You can put it above this high here, or you can put it above this high. Whatever your preference for this illustration, we'll put it above this high right here. Now, sometimes you do want to move it to go above the previous high, because this stop loss can be hunted and then it keep going in your direction. So you can either put it above the previous high, or if you see that you get stopped out, right, and then it comes back below. So if we never close, strongly close, like I talk about in the first or second video, if this doesn't strongly close above here, right? And then it comes back into this area that was a false break, and you can count on the bearish continuation. So this would have been another entry after this flat top candle had closed, and you could have taken profit at the previous low for a 1 to 3. Or if you left a runner, okay, if you took partials and left a runner, you could have caught more of the move. But like I say, don't be greedy. Do not be greedy, and be grateful for the profits that you do get. Okay? Be grateful for the profits that you do get. Now that would have turned into a 1 to 5. But again, when you're in these trades, don't have that greed mentality. Don't have that fear of missing out mentality. Like, oh, I could catch more. I could make more. I could make more. Because sometimes the market reverses on you. And then you don't want to look at the chart and see your profits getting lower and lower and lower, because that's going to mess with you mentally. So take your profits off the table. Be satisfied with it, because there's always another trade, and there's definitely always another trading day. Okay? So if you secure your profits and you hit your target, don't worry about whatever else happened for the rest of the day. Trying to catch a bigger move and a bigger move and a bigger move is not always best. Okay? Getting your 1 to 1s, 1 to 2s, 1 to 3s, 1 to 5s, whatever the case may be, whatever your target is, get that, okay? And be satisfied. That is a big mistake that I made for a long time in my trading career, was not being satisfied with the profits that I made. I wanted more and I wanted more and I wanted more, and that greed caused me, like I just said, to watch my profits dwindle, you know what I mean, after I was already being deep in profits. So I say that from a place of love and a place of experience. All right. Now let's look at this one, because this one looks a little different, okay? Maybe this one would have confused you a little bit, because we got above the 200 EMA, okay? Now we still see the 800 here, higher time frame, as we know, higher time frame rules, but we still want to pay attention. So say this one confused you a little bit. Say you got to the chart, this is about 250. And you said, okay, we've been in a downtrend, but I see this push up, and now we're above the 200. Should I be looking for buys? And the answer is no, because what did I tell you in my previous video? If you see that price goes above the high and does not close strongly, and it comes back under that key level, we talked about key levels in video 1. You want to go back and visit video 1 if you haven't already. If it comes back below, this was a false breakout, and you can count on the trend continuing, okay? So don't let that confuse you. Now, what do we get here? After this false breakout, we got a flat top candle. If you still weren't comfortable, you could have waited for the second one and entered after the second candle closed. This one had a lot more momentum than this one, so that is quite okay. We don't have to be the first to get in the market. Let's bring this down, stop loss above the high. And if we just took it to the previous low, that would have been 78 pips and a 1 to 2. As you can see, it went much, much further. But again, don't let the greed get to you, because just like after we hit this previous low at a 1 to 2, what if that didn't happen? What if, my replay isn't working. Okay, cool. What if this didn't happen? What if you got to a 1 to 2 and then it just said boom, right? You would have been mad because you were in profit, right? And then now you're getting stopped out. So don't be greedy. Do not be greedy. And after that, did we get any more entries? No. So we're ending the day in consolidation here. It's 5:48 my time. But this was one entry. And these are conservative entries. One entry for a 1 to 2. Okay, we had another entry here for a 1 to 3. And then we had an entry here, which is a 1 and a little bit over a 1 to 1. So 1%, another 3%, that's 4%, and then this one was 2%, that's 6%. So 6% in one day if you're risking 1% per trade, which, like I said, is very conservative. Some people risk 2% or 3% or 5% per trade. Whatever your preference, you know what I mean. Of course, if you're risking more, those percentages will be much greater. So I hope this walkthrough today helped. I will leave a link below to contact me. That's the only link available to contact me. And yeah, be blessed. I'll see you in the next video.